Welcome to the midweek market update where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. There aren't very many stocks in play, at least into the end of the week. Most of the breakouts have already happened. So instead, what I'll do is share one really solid, in my opinion, swing trade / longer term investment idea with you towards the end of the video. So stay tuned. So jumping right into our S&P analysis, starting with our sectors as we always do, who was leading, who was losing, and where was the weight? The XLY consumer discretionary led the pack today, up about 0.75%, whereas utilities led to the downside, down about 1%. Utilities, not a huge deal in terms of sector weight. XLY certainly makes the top 5, so it is noteworthy that it led the pack all the way up here at the top. Next up, we know that the XLK is the heaviest weighted sector, only down about 0.1%. The XLF, second heaviest weight, up about 0.2, and XLV, healthcare sector, was down about 0.4. So overall, I'd say there's a clear skew of heavier weighted sectors being less red than some of these things down here, barring the XLV there, that are more red, right? We have lighter weight sectors down below as opposed to heavier weighted sectors that are, clearly up towards that top of the list. Let's check in on some of these charts and see if there is overwhelming risk mounting in one place versus another. I'd say the XLK looks great here. Honestly, a break of this horizontal area of resistance and now just holding, right? Just taking this small inside bar up here towards the top, definitely holding the top third of that breakout range. It looks good for higher, right? This certainly doesn't strike me as bearish, and it doesn't look like there's an overwhelming amount of risk in the XLK or tech sector. Financials, on the other hand, we know have been taking a bit of a beating with the whole news that, Powell's not going to raise rates until we see proof that there's inflation instead of just fears, right? But obviously everyone knows there is inflation. So this is interesting to me, right? It does strike me as slightly more bearish, right? We obviously broke out of this range now, and the question will become what happens at the bottom of the range. And just to put a value to that, let's go ahead and mark in a level there. That's at 36.60. I would watch for either a back test and rollover. This might actually come early with that inverted hammer that printed today, or do we back test and accept back into this range, in which case that would obviously be more neutral and healthy for the S&Ps to continue higher. So really going to focus a lot on that area there, the back test of that range, if we can even make it there, right? Obviously, the inverted hammer has some more bearish implications. Moving over now to our XLV for the healthcare sector, this one still looks neutral to slightly bullish to me. Obviously, this is the range, and we're holding up in that upper 50%. Remember that this area of consolidation happening above the 50% mark just simply has to be more bullish than bearish, right? If it was more bearish, it would be consolidating down here, threatening a flush point, something like that. Instead, it's starting to look more like a pressure cooker top over 125.50 with some clean acceptance. Let's move on now to our VIX and check in on volatility and see what's happening here. This is slightly one of the reasons why I was a little more bearish headed into this week as opposed to bullish. If you watch the weekly watch list, you'll certainly note that. It's because we got a strong close here at our 2050 sort of mark where we know volatility picks up and things can get, nastier and the ranges will expand, right? So that's why I sort of carried that bias into the week, but obviously I was dead wrong. We collapsed all the way to our sort of floor here at 15. So it wouldn't be, unreasonable to me that on any sort of sideways to slightly red days, we would see volatility do something like this into the end of the week. As it sits right now, again, a small red day certainly wouldn't hurt the uptrend, which we'll discuss in just a moment, but it looks like it could move slightly higher off of that 15 floor. Lastly, we'll move over to our TNX, the 10-year rate, which really ties more in with those financials. Maybe we'll flip up the order for the next video, but this, again, doesn't really strike me as concerning. Obviously, with the inflation talks, it made that move lower, and now it's just kind of holding here underneath that 1.5. As I've said in the past, I don't really think you have to be overly concerned with it until we really start trending lower, like breaking down on some trend action towards that 1% mark, or if it can make a miraculous move back into the range and take out the top towards that 2.0, which is the 20 here in the TNX. So until we really establish some sort of new trend, I mean, I'm not going to disagree that this isn't a downtrend, right? It clearly is, but until that becomes more apparent that we're moving towards 1 or up towards that 2, again, I don't really think it's going to impact what we do into the end of the week. So TNX kind of off the table. Let's move back over to our SPY, check in on some of these levels that could be in play. Obviously, as we discussed, we were more bearish coming into the week. This certainly looked and felt bearish, but to me, I mean, now it's a completely different story, right? And one thing I want to, also point out is that This here was overhead supply that I thought would have to unload lower, but it was very evident early on in the day on Monday that it wasn't the case, and instead medium-term buyers stepped up. And very, very ironically, right? Maybe I should listen to my own actions more often. I was a buyer on Monday morning. I'll put this screenshot up on the screen now so you can actually see, but I was one of those buyers who stepped in and bought the dip, quote unquote, on that Monday morning. So again, maybe I should have listened to that a little bit stronger for the weekly watch list and followed my actions there. But we did move higher, and it seems like medium-term buyers really stepped up and made a strong statement at that 50 SMA, defending it, certainly closing strongly above on that Monday, and then seeing follow-through even on Tuesday. So as the chart currently sits now, I wouldn't really expect a full rollover again. Who knows? Anything can kind of happen into the end of the week, but as it sits, again, expecting more of either consolidation in this kind of zone like that, or a break of the double top here at 424 the whole dollar to basically take us to all-time highs. So again, into the end of the week, all-time highs could be in play over the top, or probably more likely after this really impressive run, I would say that consolidation and something like this could be in store. If 421.38 breaks, I would really look for this area here, which is right around 420 the whole dollar, to act as support. You can see here, as well as on Tuesday, that was a support as well. So that'd be kind of the line in the sand underneath that 421 area, and it would also be taking back, in my opinion, a critical area, like in terms of percentage move of this move here, of course, it would be more than, I would say, a 38.2. Let's actually throw the fibs on just to confirm. So going from Friday's low, just to give the benefit of the doubt, again, our 38.2 is baked in there at 420.42 just about. So again, it would be a little more of a pullback if we were to violate that area there at 420, which we just discussed. So headed into the end of the week, neutral to bullish. Let's move over to our internals and see if this is telling us anything different. See, any divergence here. If you're not familiar with this screen, definitely get familiar. Top right-hand corner will tell you what this all is, how you can set it up, and make better decisions with your intraday trading, right? So volume, certainly impressive there on the Monday move, so I will give the buyers credit. They certainly stepped up with some solid strength. Tuesday, though, a little bit perplexing that volume was, negative all day and then popped positive into the end of the day, even though we mostly had a trend day higher. So that's given me a little bit of a question mark, right? And the same thing with our ADDs. This is exactly what should have happened on Monday with the trend, and then Tuesday, again, a little bit of a question mark, actually spending the majority of the day under the zero mark. But as we know, the most important intraday indicator is definitely the tick down here, and just look at our cumulative builds. I mean, just so strong out of the gates every single time. So that is a little boost in confidence in really understanding that yes, that day is going to be a trend day. Again, as a rule of thumb, what we say is if at 12 o'clock you generally see a read at 2,000 or higher, you're going to have a trend day on your hands, especially into the end of the day, and obviously that was the case. Compression here on Wednesday, no big deal. We know it was an inside day sort of deal. Speaking of inside days, one thing I want to point out here is just how inside and balanced it was, right? Let's actually illustrate this with the market profile. What we'll do is come on over here. And now what you can see is that on Tuesday, we actually had a triple distribution day. So here's distribution 1, here's distribution 2, and here is distribution 3. The overnight session, where did it accept? Right into the upper third. Today's session, where did it accept? Right into the upper third. So to me, this is screaming acceptance as opposed to, rejection of the move higher, essentially. If we were going to go lower, right, what would have happened, let's just think in terms of auction theory, we would have needed to move lower to find new buyers, right? We would have needed to do something like this, see if there are buyers in this distribution. Are there more buyers here to prop prices up and potentially move higher? Yes or no? If no, you move lower, right? So on and so forth. So thinking in terms of auction theory, right, there are still people willing to buy and accumulate the market at these prices up here, accepting that upper distribution. Obviously, we'll have to see if that changes. If these are just short-term traders who are propping the market up on a day like today, obviously we have a very mechanical low, which is the pre-market low here, as well as today's low, aligning at 42.30 quarter. If that were to flush, I would expect a move lower to essentially the prior day's low, right? That's how you use these things. This would essentially negate the acceptance from in here, telling us that this is just short-term buyers and they are weak-handed, right? If they're truly longer term buyers, they're just going to hold, and the market will hold here and potentially move higher. Again, think in terms of auction theory. Who's feeling pain? Who's rewarded for their trade? What time frame are they looking at? Again, if these are weak-handed traders that just want to make a quick buck, see the follow through from the move, they're just going to liquidate underneath that, again, mechanical low that we just pointed out. The last thing I want to make your attention to here on the market profile is, of course, our major area of single prints from the Monday move. Just note that there is going to be very, very little support underneath this area of the chart. So the box that I just drew from about 4,200 and lower all the way down to the bottom end of the move there at 4165, expect if we trade back down through it, there to be absolutely zero support in that area, right? We should, if this is how the market plays out, and I don't know any better than anyone else, but if we trade back down to 201 and it looks like we're not bouncing there, that would be a great place to initiate a new short, essentially looking for the move under here to do something like this and travel to the low end of the single prints, right? So these are the scenarios that I try to, alert you guys to, make you guys aware of. I want you to think in this type of manner, right? It's not about headlines. It's all about market structure, who's positioned where, and, are they going to be feeling some pain come the next day as we start trading under or above a critical level. Let's move back over to the platform here and talk about the rest of our broad market. Of course, we have the Qs, just zooming in. Again, looks very similar to the XLK. A bullish candle today, just, sort of consolidating up here. It's not an extreme blow off top with a massive upper wick, but there certainly is some upper wick there. I still would give some credit to the buyers for breaking out over that horizontal level there. If we pull back, I would want to see that hold. Let's just put a level to that. That hold level should be, if we grab the other tool, right around our 344.68. Okay, so watching that on any pullbacks, obviously after that is 342.36. But as the chart currently sits, again, it looks good for some potential either sideways consolidation or a move higher back into blue sky territories. IWM up next is still kind of giving me the question mark. It doesn't really look as if it wants to break out on some true strength here from the resistance trend line. Again, we've been consolidating for quite some time, so it's not always going to give you the best reaction. We did break back above it. As the chart currently sits, I would be expecting, again, sideways to potential lower actually here in IWM, given the fact that our upper wick is much more prominent. We clearly rejected that 230 area, and I would, again, look for something like this potentially into the end of the week, maybe back testing once again the resistance trend line. Let's get into that final trade idea, or the one sort of idea I have to share with you, and it's going to be Airbnb, okay? And the reason I really like this play is simply because look at what's happened from this section of the chart and forward. Do you notice anything peculiar about it? What I'm certainly keying in on is the increase in volume. I mean, it's nearly double, if not triple, what was happening in this entire section of the chart here. So to me, this looks like strong accumulation as opposed to people selling their shares. Sure, this was a nasty move lower, but we're slowly starting to stair step higher, something like this, and develop a new uptrend on strong volume. Looks like it's being accumulated. I personally have used Airbnb a number of times, always have a great experience. So, I mean, that's just basically my feel for the company. I don't know too much about it fundamentally, but overall, on new IPOs, what you generally look at is where was the opening print. So there was the opening print drawn right across, and we're trading back above it. And again, on that volume, it looks like it's accumulation as opposed to people selling and getting out of the shares if they were newer buyers back in here. So that's what I have for you. Again, I'll flash up on the screen now that I did actually buy some of this in my M1 Finance account. If you're interested in M1 Finance, I'll link a video down below. Also in the description is a free link to get $10 or up to $30 actually, I think now, when you sign up for M1 Finance. So definitely check it out if you're interested in learning more about that platform. They certainly have fractional shares available, and that can make playing something, stocks over $100 a little more easy for people with, beginner-sized accounts. So all things to consider. I hope you enjoyed the idea. I hope you enjoyed some thoughts on the market today. And with that being said, I wish you all a green trading week.